Although the Hershey Company represents a huge slab of chocolate with a market cap of over $36 billion, as a global leader in manufacturing chocolate, non-chocolate confectionery, salty snacks, and pantry items, it's faced waves of challenges that could be fading and eventually overcome. After reminding ourselves just how big Hershey is, we'll go over some difficulties it's faced and how they're being dealt with, laying out the case why the sweet stock could soon stop melting and get back to growing. Operating in over 80 countries, the company is divided into 3 key segments: North America confectionery, North America salty snacks, and international. It has iconic brands like Hershey's, Reese's, Kit Kat, and Skinny Pop. Yet significant heat in recent years has seen this snack food giant melt due to geopolitical instability, supply chain disruptions, and rising cocoa prices, which have driven input costs to multi-decade highs, resulting in limited options to increase prices. To make matters worse, the early indications for the 2025 to 2026 cocoa harvest season suggest that a significant correction in prices is not on the cards anytime soon. These pressures already saw Hershey's first quarter net sales drop by 13.8% year-on-year. Other concerns revolve around the rising popularity of GLP-1 weight loss drugs and the Make America Healthy Again campaign, both of which could contribute to more reduced sales, and even the elimination of candy from SNAP spending in some states. However, when looking at the bright side of the candy wrapper, Hershey could make a comeback later provided cost pressures subside, supply conditions improve, and the evolving diversified product portfolio performs as promised. From this perspective, Hershey fans see market forces starting to turn in Hershey's favor. It's reasoned the worst of the cocoa price shock is over, largely because the sharp decline in output from the Ivory Coast and Ghana could have already seen the lowest of the production gap priced into futures prices, which have already factored in significant disruption. As new trees planted during the crisis begin to reach maturity, the supply shock is expected to ease over the next several years, leading to lagged but gradual margin expansion for Hershey's. Likewise, Hershey has benefited from a decline in sugar prices, which has been a significant tailwind to its gross margin. The company's strategic investment in salty snacks and better-for-you categories has also transformed its earnings profile, with products such as Pirate's Booty, Skinny Pop, and Dots Pretzels driving growth and expansion. Then, despite concerns about the impact of GLP-1 weight loss drugs on demand for indulgent foods, Hershey's is well-positioned due to its diversified product portfolio and strong brand equity. The company's salty snack portfolio is growing faster than traditional candy, and its products have permissible indulgence appeal and strong brand power. From a valuation perspective, Hershey's price-to-earnings multiple looks elevated due to depressed trailing earnings. However, if earnings normalize even back to 2022 levels, current multiples would compress meaningfully. While the company's long-term pricing power, brand strength, and improving cost structure could support a return to historical EPS growth trends. Indeed, Hershey isn't out of the woods just yet, but with the worst of cocoa inflation likely to be behind it in the future, sugar costs plunging, and supply chains healing, coupled with growing success in non-chocolate categories, the narrative behind its underappreciated recovery story offers an intriguing proposition for potentially patient investors that may be rewarded with solid returns over time.